two panelists who are going to talk through the session with me. And let me first introduce Nitin. So Nitin joins us virtually from Dubai. He has about 30 years, he's a veteran banker with over 30 years of experience, worked with Citi, JP Morgan, Morgan Stanley, Barclays, and then with Masraf, and now he's the COO of Masraf. And I would also like to invite Dimple from Intellect, and Dimple is part of Intellect, and she has done a lot of work in the space of lending. So we'll hear from both of them about how lending is being shaped up in this country. There were questions raised about the regulators' support, and in the previous panel, we'll hear about that a little bit more in this panel. While I know that there is a hard stop for Nitin, so I'll start the session with Nitin, and normally we start with ladies first, but I have to apologize here. Dimple, I want to start with Nitin. Hi, Nitin. Good morning. And when we talk about digital lending, people always say, when you say lending, is it retail? Is it commercial? Is it corporate? What is it? So briefly, if you could touch upon segment-wise how the digital lending landscape has progressed or has evolved, matured, and how has technology played a key role in this whole process?
Thanks. First of all, thank you for inviting me, and good morning to everybody. Let me go segment-wise. I know time is short, so apologies for that. I have a commitment to central bank meeting. Let's start with the retail, right? From retail to corporate, the complexity moves from more simple in retail to more complex in corporate, because retail you probably have focus on more speed and the accuracy and timing and all that, wherein in corporate you have more personalization of the need as well. And then you talk about the underlying collaterals and all that come with it. So to me, it is a spectrum, though it's getting more diluted. More than technology, I think today role of data and data insights is playing a much larger role when you talk about lending, because you need to, the whole idea about lending is about risk management. So more data you get, internal data, external data, social data now is also playing a big role. It all depends on that. But if you look at the way it's progressing, I think there is a lot of personalization. There's a tailor-made lending solutions. And again, it goes from retail to corporate. The speed of approval is critical. The transparency around the whole process is critical as well. And I also feel, finally, if you look at from the corporate side or SME side, there's a lot of collaboration between the banks that is coming along. So we have an example in UAE, it's the UAE Trade Connect. When you talk about invoice discounting, right, to avoid any fraud or duplicate discounting, the banks have signed up to the service and they make sure that there is no duplicate invoicing from the SME side, especially in the SME sector, to collaborate better. So these are the few things that are coming up rapidly, and that's thanks to the technology as well as the data, underlying data that the technologies can consume in decision making.
Another point is when you talk about lending, you touched about a very important aspect of risk management, and you also mentioned about data. Now, how has the whole evolution of data, and we just talked about AI previously in the last panel, how have they actually helped in creating a frictionless, experience for customers on the lending side?
Conversation is complete without AI, so I deliberately was trying to avoid it, but glad you brought it up. The thing is, there is evolution around the data side, the analytics side of it as well. So the way we see this, that we're rapidly moving towards looking at not the data from conventional sources, but also for unconventional sources. So there's a lot of this, the data mining from the social perspective. There is a lot of external data influence. You can do a very exhaustive industry sector analysis. You talk about, the business, when you're lending to a customer, their business analysis, the supply chain analysis. So a lot of data availability is there. And when you look at, earlier we had manual, we moved to rule-based. Now we are moving towards, more, artificial intelligence, so that you can actually look at multiple parameters at the same time, and it's not a linear, decision making. So absolutely, it helps in, and I'll take a phrase, and I've been in banking for more than 30 years. The good customer pays for the bad customer. So, and entire pricing of lending is based on overall risk, aggregated risk. In my view, we are reaching slowly a place where we would be doing right pricing for the right customer and providing the right value. So a good customer should not be bearing the burden of a poor or a bad customer or whatever. I don't want to use bad customer, but a risky customer, if you may. So that is the progression that the data and the analytics or the AI is helping us get to. That's my view.
Thanks, Nitin. Just one last question before, I know you're running out of time, but people now talk about being agile, and agility is not only from a technology standpoint, but agility is about how fast you bring the products to the market. And we talk about, when you talk about lending, when it takes time to basically launch a lending product into the market. So how do you think the whole agility of launching digital products have, evolved or have come into, effect with banks adopting technology?
Another good, interesting question. So, see, if you look at the trend on agile and agility, it started with the process some time back, right? And now it is caught up on the technology side as well. So you have more modular technologies, and a lot of advancements through, APIs and all into integration. So you have, one base. So earlier when you would buy core platform, it will be like be all end all, and that's what my bank was 2 years back. Now we are making it more modular, which means we get the best in class component or function for each of the need that we have, right? So integration is, so that's agility. I can plug in something very precise and specific for internal use or for the customers to give more enhanced customer experience. That ability gives us like more rapid feature deployment, and you can actually also undeploy, descope if you feel that customer segment is not happy with it. So you don't have to live with everything, all in a box. It is all, Lego blocks. You can remove some, put some in. So to me, the advancement and agility comes from the ability to integrate fast, ability to to analyze fast, because now the data mining is also getting so much better. So you can analyze fast as well and take a decision. So to me, it's all about the technology and advancements and the agility part beyond the delivery itself as a process.
Thank
I
you.
hope it answered your question.
Yes, thank you, Nitin. Unfortunately, Nitin has to leave for a meeting with the regulator, and hence he's just signing off. Thank you, Nitin, for joining, even if you had this pleasure of going to the central bank meeting. Thanks a lot.
Yeah, always a pleasure. Thank you.
Thank you. So before I start the question, Dimple, so let's look at let me take you briefly about what the digital lending landscape is today in Saudi. So things have evolved, and when we talk about the digital lending, people always talk about digital lending and retail or retail banking, but things have evolved. We are talking about commercial banking as well. When we say commercial banking, we talk about the corporates as well as the SMEs. but more predominantly SMEs, because that is part of the national agenda, the agenda of every GCC country, including Saudi, which has close to 1 million MSMEs, are focused on providing financing solutions to them through banking channels, through fintech, bringing a lot of credit insurance companies, and hence creating that ecosystem that allows for a frictionless, as we're just talking about just now, frictionless, data-enabled, AI-driven, lending experience. So and Saudi is not far behind. So what happened with the Saudi has set up the SME bank for supporting the SMEs. We have banks doing a lot of experience around SME toolkit, SME I would say in a box, beyond banking services, and so on and so forth across the region. So on that context, Dimple, you have seen a lot of implementations for SMEs, especially on the digital lending. So what has been the change that you see, globally, in the region and specific to KSA over the last, let's say, 3-4 years? People used to always say in the past BC, AD, now let's look at before COVID and after COVID as well, where there were a lot of things that changed. So can you just throw some light on that, Dimple?
Yes. Hello. I hope everyone can hear me. So this is a very interesting point. Before going there, I just want to highlight, I've been handling this market almost for a decade now. So that reveals my age as well. So let's get into a little more detail. Today, everyone talks about lending. When we talk about lending, there are key elements to it. One is frictionless credit. Second one is instant gratification. I don't want a loan after 1 month. When I need money. The second is mitigation of the risk and the sustainability. So these are the key elements that anyone would look at. And let's move into when you say digitalization, there are key elements everyone was talking today, AI, ML, and the other part is the experience. So I always see AI is bunch of data I'm carrying in my bag. I don't know why this is, me being a lady, I don't know, because I always think my messed up bag is like AI for me. That there is so much of data, I need to take it out one by one. Now, there are two elements. When digital lending and AI is a nice combination. So there are lots of data I have, and I have to give a good experience to the customer, and how am I going to use this? So this is what we talk about, a proper platform. So when it comes to experience, this is a very diversified market. So when it comes to lending, there is a retail segment, SME segment, MSME segment, and then there is a corporate, commercial banks. So the data also needs to be arranged in such a way to address all these 4 segments. Now, getting one side deeper into that, you go for retail, you have mortgages, personal loans, BNPL, then comes to SMEs, where you have B2B payments, lending payments platforms, and so on. It's a very cluttered area. So the data needs to cater for all the products, all the segments, then comes the behavioral modeling. So experience, this behavioral modeling is all about experience and mitigating the risk. So where we take the data out and slice it in such a way that can cater to all these segments to mitigate the risk. So can I talk more?
Yeah, please.
So there is another key element to it. So when we onboard a customer, everyone is very excited about onboarding the customer. And one thing I have fell in love in Saudi is that the way the Saudi infrastructure has been done, or rather ecosystem has been built to onboard the customer. So I'll bring one example. So I have been traveling to APAC, Europe, and North America. I've been handling this market very closely. So, and being a female, little pokey into all these details. So I have got into the little bit of details on the onboarding layer. So The beauty of here is that you have infrastructure in place for Nafeed and Nafaat. So Nafaat is one thing, is a seamless onboarding for you, risk-free onboarding. Then Nafeed comes into play with promissory notes, and they're further expanding into true digitalizing the onboarding process. So bringing multiple trade license validation, signatory validation, not only to that extent, even going into the detailing out the memorandum of article. So this is the beauty that the government has invested. So if you look at China today, they started this frictionless credit immediately. They jumped in and they started. And their MPA rates increased by double. The why? Because the infrastructure was not in place. So the Saudi has structured and paved the proper infrastructure to do a proper onboarding analysis, so that the banks can easily, risk-free onboarding can be implemented for retail, SMEs, and corporate. Then go to the next level of monitoring this using the data. That is where the fintech partnership comes in. So there was a question, I don't know who raised that question. There was a question, the fintech partners come with the technology without domain. No, they come with both. And they sit together and they bring the actual value of data to evaluate the customer risk and onboard the customer and do a proper delinquency tracking or not collection. Collection comes last. When the person is almost about to die, we bring the collection. But the delinquency management comes last. So that's a proper tracking is the another part. So that is all about the platform.
So interestingly, you mentioned about delinquency, and it's not only with retail, but even the corporates today have been mandated to have data management in place for early warning signals. And early warning signals play a major role in actually reducing the NPAs of your lending portfolio. Now, how the early warning signal implementation has been in the kingdom, and how do you think, as you compare it with the other markets? Because there is a law here. I mean, interestingly, not many of the developed markets also have a law on how to implement EWS. But here you have a law which was passed 5 years back, and many banks have actually started implementing them. So how have you seen the implementation of that compared to the other markets?
Compared to other markets, as I always say, they a well-organized way of digitalizing. So they first came with the regulatory, laying down the proper regulatory requirements, then moving on to the banking to implement that. So when you're implementing, so it's today if other part of the world, if you look at, they look at a collection system which can support one thing, yes, early warning, then the other element is tracking and monitoring. But what about your risk analysis? So that is where the importance comes in. Probability of default. It is not a one-time thing that when you do onboarding and onboard your SME or your retail customer. This is a continuous tracking. Sending alerts to, if you take, for an example, SMEs, MSS SMEs. So send alerts to your RM as well as your customers to advising them, guiding them, how they should manage their portfolio. So that is where we have heavily invested on AI-based, credit risk, AI-based analytics to support the underwriter as well as continuous monitoring. So that is getting implemented in Saudi, and every bank is looking in that angle. So I'll tell you, a couple of years ago, when we discuss with bankers or the risk department or the collection department, they always say, okay, let's track it. Early warning, aging reports, tracking, and so on. Now they are very clear. They ask this question: how can I monitor from the beginning, the onboarding the customer? He might not convert it to an immediate NPA. He will pay his payments, everything on time, everything. But it is not what we know. We need to understand. Through the data, what is their transaction patterns? For an example, I've been using my credit cards, I'm traveling across the world. Bank has all the data. Does not mean that you misuse the data. You take the pattern and identify the pattern. Will this be a probability of default in future? Maybe down the line 1 year, maybe down the line 2 years. So these are the areas that banks are looking at, especially in Saudi now.
I remember Robin was a little upset of the first panel or something like that, saying that there were 2 words he didn't hear. But I think you heard about instant gratification, and you also heard about user experience. Coming to user experience, see, there's a perception that user experience is key when you are getting onboarded as a new customer, or onboarded in order to open an account. That's across retail, MSME, and corporate. But when it comes to lending, the perception is user experience is okay, secondary, but more important is to ensure that we give credit to the customer, because the customer needs financing. So we need to ensure that he gets the credit, he gets the facility, or he gets the money, and once that is confirmed or committed, he's going to come to us. So when that is the kind of perception from a lending perspective compared to a general onboarding user experience, how do you think that, why do you think that user experience becomes key from a lending perspective? And is this a myth or is this a reality?
This is the reality, because experience matters. Experience is something unique that matters to everyone. So I'll tell a small example. So I wanted to buy a bag, and it was quite expensive. So I went and tried to purchase. I checked my account, didn't have money. I checked my credit card, no money. But then there was BNPL access. I clicked that. So the experience, unit experience matters. Then they said, upload all your information. So when you start uploading all the information, bag got sold out. So that is where I said instant gratification. So bank, at the time of onboarding, I do a proper credit evaluation of the customer, maintain and bring at that. You need to track your customer. When your customer has no money and goes into a purchase, first option has to be the bank. Then they should check whether there is a pre-approved loan, or you can trigger, would you like to avail a facility? It could not be in a mobile itself. When you say experience, we always think experience is only unique to digital experience. It's from the mobile. No, I go to a POS terminal. The same experience I should enjoy. There, the experience makes a real difference. So we always say, it's nice to have all these things in place, but the experience what matters. So experience comes with 2 things. One is the user experience from digital part of clicking. The second one is there the AI play a big role, plus ML play a big role. So where you need to, because today we have partnered with Microsoft, Copilot and all, to take this data out, use LLM engine, and provide the unique experience to the customer. It's all about experience.
Right. There was a mention about fintechs, and there was a point about, or a question raised about the SAMA's involvement, regulators' involvement and the support required, especially when it came to the sandbox and others. Now we know that there are a lot of fintechs already operative in the KSA market and being successful. Now, what do you think has been the reason for some of the success of the fintech on the lending side in Saudi? And is there room for more fintechs in Saudi from a digital perspective? And how the banks are partnering to really give a seamless experience to their customers?
Yes, there's 2 questions. So one is, today by 2030, the country is looking at expanding the fintech footprint for 550 plus. So same way, if you look at, when you say fintech, they're very clear how they want to expand the fintech footprint. So there are a lot of startups, lending startups going to come in. So when it comes to lending startups, if you take India, India has now almost 333 plus lending startups. If you take China, they have more than that. If you take now even in Japan moving on to lending startups. So it's always good to open the doors for startups. Same time, there should be a proper governance on data management, credit evaluation, and monitoring. So these three elements needs to be paved. So where the government also looking properly to implement that. Plus, when we discuss with the bank today, so this is one of the beautiful question I always hear from this part, especially in Saudi, that they always ask, okay, Dimple, I'm happy with your system. It's very nice, platform, cloud native, everything is great. Now tell me, how you mitigate the risk, increase my portfolio, and bring me the sustainability. So there we comes with the real utilization of AI and the data and the process orchestration. So there is proper rules in this country, and the majority is well aware what is going across the world and how to mitigate this risk when you're onboarding fintechs. So I find here is a most luxurious world for fintechs.
See, one more thing that everyone talks about today when it comes to lending is also about ESG. And one of the things that fintechs bring to the table is ensuring that your digital lending is sustainable, as you rightly talked about, but is sustainable not only from a growth perspective, but sustainable also from an ESG, governance perspective as well. So, how has the entire fintech market globally and in Saudi specifically evolved, and where banks are cooperating or partnering with them from an ESG perspective?
Yes, so this is one of the key points. In fact, I want to touch upon this ESG. So there are two elements in ESG. One thing is you're educating your end retail customers on ESG computation. When you use something or use a Uber or anything, you put the carbon emission. So the percentage and all. So one thing that is very common in everyone's today's app. So it's everyone wants to know, if I take a Uber, how much I'm, those appropriate point is taking a flight. So today, how much I'm a total ESG percentage. So this will help me to understand what the contribution or what is the damage I'm creating to the world. So how can I complement that? So with that, you can come up with the different programs to donate this money into such a way that can implement certain things as environment, build the environment, grow trees, and so on. So this is very common now in every implementation that we are doing in Europe. Europe, every implementation, they look at the retail. Then comes to the SME. The industry also matters. Now when we are doing credit evaluation, the ESG, the contribution to the ESG is becoming a key credit evaluation factor. So today we are we're having a very large implementation in Europe where we have done ESG computation using AI and using this for the credit evaluation purpose. Not only for SMEs and corporates, it including the retails as well. So when you come to the retail segment, there is another point. So we go and buy a lot of items on Amazon and all. So we tend to buy a lot of plastic items. It's easy, usage through. So the unique element is when the banks can influence. Okay, you have bought this much of items, so why don't you donate this much to the society? So it's a two-way. So the bank is the key person or key. Today's every today generation is little bit moving away, but the banking is a still role model in the world who anyone would look up for. So the bank can actually influence the ESG. So these are the multiple areas that we are looking or implementing in, especially in Europe, and these are the areas that getting discussed in Saudi as well.
So when you talk about lending, one of the key things also is about pricing. And when I bring in the ESG element into picture, now can we have a situation where AI comes and says that, especially when a BNPL kind of a scenario, that you're buying something which is not aligned to the ESG regulations, probably block the guy from getting a BNPL kind of a situation. Maybe that's where we are headed to, because humans tend to overwrite, because whenever we have a tendency of, there may be a lot of bankers here have a tendency of deviations, exceptions, and we write policies and then we'll have a one-page policy and 5 pages of exceptions and deviations. Maybe AI will stop that. Now, when it comes to pricing per se, from a digital lending perspective, we always expect digital lending to be more standardized. We expect there won't be much variations, no deviations, no exceptions, and so on and so forth. But how, especially when it comes to corporates, because you guys have done a lot of corporate implementations as well, across for working capital and for capex lending. So how have you been able to help use digitization to kind of standardize or reach a level of standardization to ensure that you minimize and you kind of reduce the number of exceptions and deviations, so that you get the experience factor still plays a role?
So this is where as I mentioned, it's a proper credit evaluation. Now the deviation is, so those days how we underwriters were supported with the credit evaluation based on the very static rules. So those static rules are created, identified, and implemented. So with that, when it comes to certain deviation, so it's a manual way of handling, discuss, okay, fine, we'll give you this credit line and all. Then plus all the elements sometimes tend to ignore. Sometimes, this is, as Nitin mentioned, good customer against the bad customer. So there might be a good customer, but these certain policies hold these good customers back. So this is where we are using the AI or the data through a proper data mining. There are 3 steps. One thing is risk modeling. So you model the patterns and basically align the customers into those models. So in that way, this is the exact pattern of the if you're coming from this type of industries, if you're having this type of balance sheet, because we do the proper balance sheet scanning, data fetching, analyzing, and all, and mapping against certain risk models. So it's an automatic way of doing it. It's a dynamic, I won't say automatic, it's an intelligent way of doing it, or contextual way of doing it. You have slice and dice the data, identified the customer, then you moved into the next step, is that okay, this is a high risk factor. Plus, it comes along with the recommendation to the underwriter. These are the recommendations, but you need to monitor these factors with a high interest rate or high monitoring capability. So these are the key elements that the AI can push into the customer or into the underwriter to judge whether I should give it or not. Now it's a workflow. It goes to the top management, everyone sees. So it's a system generated records with the actual data, and the most importantly, it's with the facts. It's not that, throwing some recommendation. It comes with the proper facts. So that moves to the management, and the top management also can take certain deviations and take a decision on it based on the true data. So it's all about true data.
I have one question before I open it up to the public. For digital lending to flourish, you obviously need a very matured ecosystem. Now, whether that is normal lending, whether that is even working capital financing, supply chain, and whatever it is we call it, it needs a matured ecosystem. how difficult do you think it is to have this ecosystem in place? And we know that regulations, are supporting creation of this ecosystem. But how difficult is it to get this ecosystem in place? And how have you seen the ecosystem in the kingdom, and how effective it is?
So when it comes to the ecosystem, I just go back to what Chetan started today. It's not a single game, it's a team play. So I cannot sustain alone. I need to embrace everyone. So this is where the true fintech partnership comes. So today the ecosystem is getting matured. One is, as a platform, you have SaaS and cloud implementation as a partner, the ecosystems on the technology side getting evolved in the kingdom. Then the other part is the strong fintech partnerships coming together. So every fintech partner, for an example, we always look at, we are very specialized in the orchestration, AI, data analysis part of it, and the rules maintenance and the orchestration and the choreography and the user experience, UI, UX. Then there is another strong partner who can do the quick analysis of the data. So read the statements, fetch the data and push it to the data store. Then we tie up with certain players like Microsoft, who brings a Copilot, which has specialized in analytics, say, LLM area. So it's a joint relationship. Extract the data, process flow and orchestration, and then partner with another strong partner. So we are bringing the best of all the worlds. So that is the most important. So that is where the ecosystem plays a strong role, plus the risk mitigation methods and the government. So that way, we can nicely partner with the bank to make the change. Because I just want to add one point. Today's world, 63% of the SMEs and the customers would like to go to the traditional banks to do their banking. And around 57%, the youngsters, millennials and all, would like to associate with the startup lenders. So the more, why, still that 63% would like to associate with the bank. So they feel the trust, confidence, everything is coming from the banking sector. So the banks needs to hold hands with all of us. So that's how it is happening across, and this is something very unique I'm seeing in the kingdom.
And how much of this whole ecosystem play is being driven by even fintechs themselves? Because let's take an example of not a bank, but any institution that wants to provide, let's say, supply chain financing they can have a corporate onboarded, they can have some banks onboarded, they can have the logistics providers onboarded, the insurance onboarded, even a credit insurance, I'm saying, not only the general insurance, even credit insurance onboarded. And some of these can be actually, orchestrated by a fintech itself. So how have these kind of ecosystem, creation being driven by banks or by fintech? It's not just from a platform perspective, but also from someone who's providing those services. And collectively, you're able to deliver value to client.
This is something very unique question. So if you look at today, the bankers, I'm coming from the banking background, so I just have a little bit of freedom to highlight that. So bankers are still have that risk associated with, and my job is to do these things, and I don't want to getting into this creating an external ecosystem. And then there are certain bankers, like Malik said, ha, and then fintech partners buy. So then the actual initiative needs to come from the fintech partners. We need to tie up with consultants, even if you look at Cedar and all, we need to partner with them. Bring the value and sell the value to the entire society, to the government authorities, plus the bank, because the bank's blessing is needed for the fintech, is to bring these ecosystems. So it's very easy for a fintech to create this ecosystem than a bank or the authorities or the consultants. The reason is the fintech partner. So I'll take a classic example. Recently, we met a strong fintech partner. It's a Saudi-based, kingdom-based fintech partner. The way they are bringing different authorities together. So if you can achieve something from 6 APIs, they are saying you can achieve the same identity, document management, extraction, validation, signatory validation, all through one API. So that is the uniqueness of a fintech partner. So even we will sit with the bank. Bank said, okay, these are the 5 authorities. I want these all 5 documents to be validated to onboard by custom. Then the compliance department comes and says, I need all these things in place to support digital SME onboarding. So there the beauty of a fintech partner comes into place. So I will bring all these, we do the evaluation, we do the validation and tie up with the bank. Even basically tying up with all the authorities also needs to be done by the fintech. So the fintech partner is becoming or rather called creation of this full life cycle. So they can bring all the teams together.
Thank you, Dimple. I would like to open up to the audience for any questions.
Yes, hello. My question is about robo-advisory. We see in the past period, most of the robo-advisory is limited within the investment side, especially many of the fintechs in robo-advisory are most of them licensed by the Capital Market Authority, and we see none of them licensed by SAMA within the banking and lending sector. So what is your vision for how can we accelerate robo-advisory, especially in lending and for both SMEs, corporate and retail? Thank you.
So that's a very interesting question, sir, because this was actually running in my mind. On our team, we had a lot of brainstorming, which we have done along in India, as well as today we are doing in Canada as well. So where this is the most important part is, that is where the fintech partners, along with the bank, it's if you go and give, this is the robotic requirement, someone will not approve it. So we need to go into actually L3 level, detail it out, each segment, each area, how this every recommendation works. What are the positive side of it? What are the fallbacks? So that way, we need to have a strong relationship with SAMA to get the approval, because one thing, adapting into the regulatory requirement and how the robotic provides the recommendation and the process flow analysis plus the final output of it. So output, input, and the process flows needs to be discussed and approved by the SAMA. So that is something that which we have started the journey with the banks. It will definitely we need to work with SAMA very closely to get in place. I hope I address your questions. We can have us separately. We'll have.
No, if you are just to add to that, you know, what happens is. The moment you talk about robo-advisory, it becomes advisory. And if you just juxtapose to what banking is today, advisory means it's all about investments. Advisory is all about, you know, where to invest, where to put your money, right? So, but if you look at every bank, there are personal bankers who are actually sitting and providing, advising on which loan to take, how to take the loan, you know, which account to open, so on and so forth, right? Which is actually getting replaced completely by digitization, if you look at it, or bringing in the whole digital angle. Now, when you look at digital, it automatically means that you are actually doing a straight-through processing. Now, there, when I'm stuck, if I need some advice, then I obviously would need someone to come, and that's when you, instead of bringing the chatbot, some of these chats are actually today driven by robotics, right? It's or AI-driven chatbot. It's not someone manually sitting and typing. So there are already initiatives that are being raised, but like you rightly said, they're very focused, and not that it is regulated, that it could actually be kind of commoditized like what it is doing, what it is today with what CMA does in terms of robo-advisory, which is more seen as a wealth management offering. I think that can come in when it gets more, I would say, evolved and more commoditized. Then it can actually be plugged in, and it could be an advice on what product you need to choose, because today people talk about product bundling. So what product you need to choose, which credit card will be best for you, which account, when you open an account, how do you to use that account. It goes beyond your investment. Any other question, please? Yes, please. Yes.
Thank you. Thank you very much for the presentation. Very interesting. Just a simple question from my side. You talked about the example of the bag and consumer lending and taking time to upload all the data. Is there a role for the credit bureau in that process, and is there more widely? I mean, many of the things that you're talking about, individual fintechs using their own credit scoring techniques, what's the role for the credit bureau and the public sector more generally?
When it comes to CIMA or the credit bureaus across the world, so there is, for me, there are two parts to it. So the credit bureaus extract all my credit. There are two parts to it. One is I need to have a credit history. So for an example, I'm a SME who's starting my business very new. I don't have a single credit history in the market. So where the credit bureau will not be able to play a strong view about me or my company. That is one part of it. For that only, we need to bring a lot of data from different elements, like utility bill patterns, past, for an example, even the post-financing, even the pattern of, if you take SMEs, so pattern of transactions done, total revenue, and total outflow and inflow. This is where the actual journey starts with supply chain. So some information or my business plan. So the business plan analysis comes into a place when I don't have any history as a SME or a retailer. Same way, if I have a history, so then there is more information, static information comes in. I'll take a classic example. My salary has got increased, right? It has not immediately got updated with the bureau. Point number one. Point number two is that I have a housing loan which is fully mortgaged, but my total picture the credit bureau does not have. It has my pattern, and I have last minute payments and all due to travel and all those. So I might have little bit of a bad rating. So this will comes from the actual credit bureau evaluation. But then there is other factors that can influence the decision-making process as well. So these are the factors that behavioral modeling comes to a play. Like my utility bill payments pattern, which integrate with all the utility bill providers. Now, the governments are maturing, especially in South Kingdom and UAE and other markets, curating data even from the utility bill payments patterns. And that's also going to decide my rating. So all these, they're playing a very strong influence, which is supporting for the credit evaluation. That is one part. Second thing is regular monitoring. Like for an example, I have a financial need today. So my credit bureau update, these things also has a lapses. So one thing they are improving today to give online real-time updates. So same times they are improving, the banks also has to get the data. Plus, the bank also has, if I'm an existing customer, my delinquency patterns, everything bank already have. My credit card transaction patterns I have, whereas credit bureau does not have. So these are the things can be used to monitor the customer patterns as well. So this both goes in hand, today's world. So we are doing a lot of research on that. So we have a separate team which support insurance underwriting as well as digital lending underwriting process. And we do a lot of research on understanding proper behavioral pattern, because this not only influence for lending, this influence the overall digital experience of the customer. What should you project to the customer? What you should recommend to the customer? So it gives a proper understanding of the customer.
But just to add, there are agencies, credit agencies, who actually consume data from the credit bureaus, and they're able to actually provide ratings, and which is monetizing the data. So the credit bureaus simply monetize the data. But then there are credit bureaus themselves who actually today not only monetize the data in a way, just by providing raw data, but they also are in the process of integrating with the larger ecosystem, getting the other information from the utility bills, from land, your rental payments, multiple other payments that you make, get into one kind of data aggregation, what they call it, which is a data aggregating layer, and then use that layer as the means of monetizing the overall data, or they have models to provide ratings and sell. And there are banks which actually consume the data or consume just the rating that's being provided by some of these agencies. And I know that there is an initiative around this even in the kingdom but it's not fully functional, but there's an initiative which started a few years back, but of getting all the data into one place, both from a KYC perspective and from an underwriting perspective as well. But the KYC is up and running. The underwriting one is actually in progress, because that's one of the key elements of your Vision 2030 as well. Any other question? Yes, please, Bhargava.
I think also with the open banking, maybe we have like the credit bureau, and we have Elm.
Right.
If you hear about it for the opening banking, they know all the information of the, the citizens in Saudi. Exactly same what's happened with the credit bureau. It will take the same with, I think, the project of open banking, which Sam lead. Sure, they have a vision or for this subject to how to get this data.
Yeah, Elm is more from a KYC perspective, which they have onboarded.
Exactly.
And which is actually the initiative was both from a KYC and from an underwriting perspective. It was more of aggregating data, which included collecting data from SEMA as well and the other providers, so that you kind of get a pattern about individuals and corporates or institutional as to how they make their payment, where they are defaulting. You might be defaulting well you may be doing well on the loan side, paying back your finances, but you may be defaulting somewhere else on your utility bills or paying your rent. As an individual, or corporates can have something else, right? So it's taking into account the overall, overall payment or overall providers, and then seeing how the payments have been, how they are getting the payments from the different individuals or corporates, plugging in together, and then coming out with how their behavior is. So it's more about tracking your behavior or looking at how your behavior is before actually coming up with any recommendation. That could be even in terms of pricing as well. That's a point that she was touching about earlier.
We feel it today in the IPO.
Right.
Like the customer, he's doing IPO and he have 2 sons. With the next IPO, he have a new son. When
Right.
he do the IPO, sometimes if we take the old data, he said, no, I get a new son. That's why Ilm here or the government, they should update the record.
Correct.
Where we are fetching that data.
Correct.
Yes.
Correct.
Thank you.
Right.
Thank you.
Thank you. Any other questions? Any closing remark, Dimple, before we close it?
So always, as I always says, it's the digital lending experience means you're bringing a unique experience to your customer, bringing the data and providing a proper recommendation, maintaining the, because you need to manage your risk, but the experience what matters, because experience what makes your customer delight. So always focusing on the experience, because every solution which we create, which we build, because we have created BNPL and most of the solution in the market across the world. So whenever I go with, we have a pattern when we have to study the market for a long time, visit the market, associate with the customer before we even propose any solutions. So the most important thing is how you can delight your customer as well as your end customer. So we always follow, walk in their shoes, understand them. Every details matters. So that is the clear strategy as an Intellect, which we always follow.
Thank you, Dimple. Unfortunately, I don't have $100 million like what Chetan had to give you. So with that, we end this panel. And thank you, Dimple. I have also thank Nitin in absentia, but thank you.